What's in store for Disney's earnings? And to me, this is going to be very interesting because there's going to be a lot of focus on Disney Plus, and I think that's just the wrong way to look at Disney. But here goes. The expectation for Disney Plus is going to be somewhere around 61 cents per share. That's the expectation. $18.63 billion in revenue. The Disney Plus growth, the expectation here is 7 million subscribers. I think that there's a possibility that Disney gets punished if they don't come in through and beat or meet those numbers on Disney Plus subscribers. But guys, I'm telling you, I feel like that's just not the real story here. Disney Parks is the real story. It was their number one revenue driver pre-pandemic. As we start to move out of the pandemic, in my opinion, and I'm no virologist and I can't tell you exactly what's going to happen here. Nobody can predict the future as far as COVID's concerned, but it certainly feels like Omicron was the last hurrah of COVID, if you will. You look at how it reacted and how the economy reacted, how short it actually was. Was the economy impacted? Yes. Supply chains were also impacted, and travel was also impacted. We're seeing that. But we're out of that now, and we're heading into the summer months. Believe it or not, that's what people are focused on right now. And I think travel is really starting to ramp up. We're already seeing the casinos move. A lot of the reopening plays are starting to move. Airlines. I have Airbnb, and I think Airbnb is going to be an absolute monster going into the rest of the year. I think Disney should also be a part of that conversation when it comes to the reopening side of their business. Yes, Disney Plus is certainly going to be very important to keep an eye on. And I'm sure that the stock's going to move based off of whatever Disney Plus is doing, which I think is just simply unfair. So we're looking at this, and that's something. If there is a pullback based off of the Disney Plus numbers, I do think that we are going to see a buying opportunity, especially because if they give an outlook on what their parks are looking like, to me, that's where the main focus is going to be. It was the biggest revenue driver pre-pandemic, and I think it's going to take that seat back as we start to fully reopen. Disney had to incur a lot of costs when it came to, preparing their guests for a lot of things when it related to COVID, masks and having the right people in place and putting protocols in place to keep everybody safe. I think that starts to come off of the table a little bit, and they get to get those profits back. Give me your thoughts on this, though. I'd be curious to see what you guys are thinking. Is it all going to be based off of whatever Disney Plus does, and are they going to get punished like Netflix, or are people really going to focus on the parks? I really feel like we have to look at the parks and to really understand how we should be investing in this stock. I'm going to show you guys the chart real quick to let you know where I'm thinking this might be headed. Now, this has struggled a ton after hitting its $203 highs. I think that it should be up here around $200. When you combine Disney Plus and the revenue that is bringing in as is, not to mention the growth. Let's just forget about the growth right now, as is. And then the potential for the parks to be back open fully, I think it deserves to be around $200 a share. Now, obviously, it doesn't matter what I think. It's only going to matter what investors are looking at. And obviously, the headlines right now are going to be revolved around streaming. With the fight for attention there, I just think that that's just not the right way to go about doing it. I look at this and think to myself, okay, we're at $140 a share, which is right where we were at pre-pandemic. This was before Disney Plus really started to take off and really started to grow, right at 142. And that's where the Disney parks were kind of at their peak. So right now, the stock's trading exactly where it was, with Disney Plus being around for 3 months. They kicked off Disney Plus in November of 2019, and this was trading in February of 2020 at 142. So we only had like one solid quarter maybe of Disney Plus to go off of, and that's why it was sitting here at 142. So if we take that into consideration, and that is trading exactly where it was at pre-pandemic, there's been so much more growth with Disney Plus. So if there's any kind of outlook here that we see Disney, reopening their parks, they're going to be full capacity by the summertime. I think that that's certainly going to be a reason to look at Disney as a potential buy. You look at the RSI, it's nice and cooled down around 44. So pretty decent risk reward here, if I do say so. We have the 50-day moving average sitting at 148.82. That's going to be an interesting spot to watch. If we can get this back up over that, I think we could see momentum continue to maybe make its way up to that 167.5 resistance. You can see another one could potentially be met here around 158 and some change. But that 166 is really going to be where we're looking at, because that's where it gapped up previously, and it obviously filled that and then some. But that's kind of what I'm looking at here. If this gets punished, right? If they come in and Disney Plus numbers aren't what they are, and this moves down to post-pandemic lows, or if we get anywhere close to what we were like in the early parts, or I should say the middle part of 2020 when the pandemic was at its peak, I think that again this should be a huge buying opportunity for them, because there's just too much emphasis on in my opinion on the Disney Plus numbers. And I can appreciate this. I can appreciate that that's what the focus is, because now it's competing with Netflix and some of the other streaming services out there, Paramount, Viacom, all of them. I get it. But this is becoming so crowded that Disney has other things in their pocket that makes them money. And I think that's what makes them more valuable than something like a Netflix or a Viacom or Paramount, or any of those other ones, because they have more than just streaming going for them. The cruises are also getting back online, and I think this is going to be something that's really important to watch for. Let me know what you guys think in the comments. Am I way off base here, or am I spot on? I'd love to hear from you. Let me know, and then I'll be live tomorrow at 3:45 p.m. Eastern time to go over these earnings live and give my live reaction to those. Love for you guys to join me there too. So hit that notification bell to get notified when I do go live, and I'll see you tomorrow.